This is an incredibly strong bullish trend, and you can clearly see how this indicator identifies it with remarkable precision. But here's the question: how do we know for sure that this trend is strong? The answer lies in this number right here. This percentage reveals not only the trend's direction, but also its strength. I'm going to walk you through exactly how you can use this powerful tool in your trading. To add this indicator to your chart, go to TradingView. Select the security you want to trade and pick a time frame. For this demonstration, I'll be using the 5-minute chart for GBP, USD. Next, click on the Indicators tab. Here, type in Level Strength Index and choose the one created by Big Beluga. Now, what makes this indicator so special? The Level Strength Index is a simple yet powerful tool that helps traders assess market strength and momentum by analyzing price positions relative to predefined levels. This indicator doesn't just tell you which way the market is heading. It gives you valuable insight into whether the trend is strong enough to trade or if the market is weak and consolidating, which could help you avoid bad trades. As you can see, the indicator overlays directly onto the chart with two primary components: a trend ribbon and a probability table. The trend ribbon changes color based on market direction: green for buying trends and orange for selling trends. Zooming in, you'll notice it's divided into 10 levels, starting from the first at the bottom to the 10th at the top. Each level is marked with an arrow, green and upward pointing if the price is above the level, and orange and downward pointing if the price is below. The trend ribbon reflects these changes instantly. For example, if the price is above 5 levels but below the remaining 5, the ribbon shows the first 5 levels in green and the rest in orange. For strong buying trends, you want the price to be above as many levels as possible. Conversely, for selling trends, the price should be below most levels. This simple visual representation makes it incredibly easy to spot whether the market is trending up, down, or staying in a range. Next, let's talk about the probability table. This is where the magic happens. The table calculates the probabilities of upward and downward movements based on how many levels the price is above or below. For instance, in a strong buying trend where the price is above 8 levels, the table will show an 80% upward probability and 20% downward probability. If the price is above all 10 levels, you'll see a 100% upward probability, signaling a robust trend. The same applies to selling trends when the price is below the majority of levels. Another feature is the probability-based price line, located at the center of the trend ribbon. Its color changes depending on whether the market is more bullish or bearish. Bright green indicates stronger buying sentiment in the market, while bright orange signals stronger selling momentum at that time. Together with the probability table, this helps you instantly gauge the market's strength and direction. Now that we've covered the basics, let's adjust the settings to optimize this indicator for trading.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Open the settings from here. You'll see a length option. This determines how many candles the indicator uses to calculate the predefined levels. A shorter length, like 10, makes the indicator more sensitive to recent price movements, which is great for scalping. For this strategy, we'll set the length to 55 to focus on longer-term trends. Next, reduce the level's transparency to 3 to make the ribbon less visually overwhelming. You can also change additional visual elements in the Style tab to suit your preferences. Once everything is set, click OK, and we're ready to trade. Using this indicator, there are 3 primary ways to trade: identifying trends, gauging trends' strength, and avoiding ranging markets. Let's start with trend identification. If the trend ribbon is green, the market is in an uptrend. If it's orange, the market is in a downtrend. Combine this with price structure or trend lines for added confirmation. For instance, here the ribbon is green, signaling a bullish trend, and the price has consistently stayed above multiple levels. Next, let's look at trend strength. The probability table gives you a clear idea of how strong the trend is. For a bullish trend, you want the upward probability to be at least 80%. If it's 100%, that's a very strong trend. For bearish trends, look for a downward probability of 80% or higher. Now, let's talk about avoiding ranging markets. If the probabilities are closer to 50% for both, or like 40% upward and 60% downward, the market is likely consolidating. As you can see here, the price is moving sideways, and the probabilities reflect that. In such situations, avoid trading until the probabilities shift decisively. To enhance this strategy, we'll add another indicator called Higher Time Frame Support Resistance by Big Beluga. So we will open the Indicators tab again. Here, search for Higher Time Frame Support Resistance and add this one created by Big Beluga to the trading chart. This tool highlights pivot highs and lows from higher time frames. First of all, we will adjust the settings to show levels from all these time frames, and then you're good to go. So in the settings of this indicator, first of all, we will change all these values to 2. This is a necessary step, and without this, the strategy will not work properly. Then change the time frames. The first one would be 15 minutes. The second one will be 30 minutes. The third one would be 1 hour. And the fourth one will be 4 hours. These are all the changes we will do for this indicator. After these changes, this is what the indicator will look on the trading chart. Now, let's go through the rules for entering a buy and a sell position using these 2 indicators. For a buy position, wait for the price to break and close above a pivot high, just like it did here. And at this time, the upward probability should be 100%. So if these 2 conditions are fulfilled, you can open a buy trade here. The risk to reward ratio will be set to 1.5, and you can set the stop loss either below the entry candle if it is a long one. If it is a very short candle and the recent swing low is not too far, you can also set your stop loss below the recent swing low. As we can see, this was a good buy signal. You can use this indicator with multiple other indicators according to your style of trading and gain benefit from it. For a sell position, wait for the price to break below a pivot low with a downward probability of at least more than 80%. Look at this example. The price broke below a pivot low from and the downward probability was 90% at this time. So we can open a sell trade here. You can set your stop loss above the entry candle and aim for a 1.5 risk to reward ratio. While this strategy is highly effective, remember that no trading tool or strategy is perfect. False signals can still occur, especially in ranging markets. Always combine this indicator with price action analysis and proper risk management. That's it for this video. If you found value in this strategy, please like the video and consider subscribing for more videos like this. Thanks for watching, and I'll see you guys in the next video.